Dan, help us out with the time frame, how we think about how the economy should play out. Just say we get a trade deal. Do we wait for, what, a quarter for growth for some of the numbers to improve on the manufacturing side, consumer confidence? How should the rest of the year play out if we do get this handshake on the 27th of March in Florida?
Well, I think that the agreement itself is very likely to be a zero-sum game if you think about it, because for many emerging markets it's going to be less exports to China because some of those soya, natural gas are going to come from the US now, and there is absolutely no evidence that China is importing less than what it needs. Actually, if there's any evidence, is of the contrary because of the rise in inventories. In my opinion, what I think is that you need to be looking at what are the details of this trade deal. Is it going to really make a change? I fear that it's actually going to be very much about small details here and there, but it's not going to change things, and definitely not change the trend of global growth, because the reason why global growth is slowing down is not because of the trade war, it's because of debt saturation.
So we're in for a big fat disappointment is what you're saying.
Not big fat disappointment. I think it's good for sentiment that you don't have two of the largest economies in a trade war. That is obviously a positive, and there is always going to be some sort of change in mentality from companies about deciding to make investment decisions, but it's not going to be the major driver of a change in trend. The trend of slowdown started way before the trade challenges started and the tariffs started. The Chinese slowdown has nothing to do with trade war.